We're on the Euro Aussie on the 15, currently 5 pips down on a double bottom stroke head and shoulders stroke higher time frame head and shoulders and bigger double bottom as well. Just to give you an idea of the size of this, I'm currently risking 33. To target ones it's 160, to target twos we are looking at 354. So let's start from the very beginning and do the higher time frame analysis. So Euro Aussie is always a big mover due to the ATR. This is what I'm looking at here. So put a structure level on here, you can see 1, 2, 3 tests. That level is held, and what we then had is, look at the long run we had here. We put in a left shoulder, we put in a head, we'll put in a right shoulder, and we went back up to retest. Then what we've done is we've pulled down. In fact, let me delete this off. We've pulled lower, we've pulled back, we've pulled lower, we've pulled up, and we've pulled lower. So this is a potential head and shoulders looking like this. Now we do not have an initial structure high, so the only other way I can get involved is if we come down to the left shoulder and we come into the wicks, and it gives me a buying opportunity right at this level. Before we go into that, let's take a look at why then I'm not looking at the market coming lower, and the reason for that is this. We had the potential left shoulder. I'm going to put a structure level on actually. There. Okay, that comes in at the very lows of the wicks just here, and you can see why that area is held in the past, because we do have significant structure levels there here on the daily. So if it's held like that in the past, it could hold like this again in the future. Now what do we know about markets that retrace all the way back to the outside return? And let's just talk through this. So first thing is we have the left shoulder here. We made a new structure low. Can clearly see this is a new structure low. However, we only made a new structure low by this much, not a great deal. Then what did we do? Then we kind of double bottomed here, came back down for a retest, and then went higher. So this in itself is an indication there's buying pressure here. Now when we went back up, if this was trend continuation, we would have expected this to maybe come halfway and then roll over and continue lower, but we didn't do that. Instead we got a full retracement back up into the wicks just here. So again, to clarify this, we only just made a new structure low. This being the dailies, we would have expected a bigger new structure low than this, and we would not have expected price to come up to retest the highs here. So this is an indication right now that we could be seeing a potential rotation, but without an initial structure high here, we don't have anything confirmed. All we're doing is reading price. So as mentioned then, if we're looking for this, we need a couple of things. I need price not to violate the wicks. Also look at where this psychological number comes in, 15800, and obviously we have major daily structure here as well. Let's go to the 240 then, take a look at this. Okay, here on the 240, this right here is a valid double bottom. It was only just valid, but it is, and you see the RSI there. Indication here again that this price is going to hold. Now for head and shoulders, my most profitable trades are when we actually have a double head, because what usually happens is we get a break above, close above, or an initial structure high, and then a pullback for a 2618. Now, in this scenario, you wouldn't enter on a 2618 normally because actually ignore that. Sorry, ignore that. On the daily time frame, this was not an initial structure high, but right here, this is. Look at this on the 240. This is an initial structure high. So here on the 240 time frame, you most can certainly look for a 2618 entry right here. Now what we did is we came down to that 61.8, bounced off it and came a little lower, but look, very importantly, we did not violate the wicks of the left shoulder. So starting to put together a picture now of the way price is moving, structure holding, major structure, the psychological number, the initial structure high on the 240, we're down in the wicks, and also the candle formations themselves. Now we're taught in trading that it's not the what but the where, and when we look at these candlesticks here, so we had quite a momentum move lower here, and what we then did was we put in a rejection candle really, and then a couple of indecision candles, and then this one right here interests me. This is a doji and we closed in the upper 20%. This is an indication here that at this level where we're seeing price stall, that we are seeing some buying pressure here. The candle after it was just an indecision candle, so really just sideways movement at the moment. And again, we have come down and tested that 15800 psychological number. So let's drop down another time frame. Okay, we're here on the 60. I think it was the 15 I had more confluence, but let's check out the 60. Yeah, no, we had it here as well. So we know that we're in the wicks on the daily time frame. Are we in the wicks on the 240? So let me double check. Yeah, we are. Okay, so let me zoom out. I'm only now going to leave highlighted the wicks on the 240. Sorry, let me go back to the 240 and highlight only the wicks. Yep, that's fine. So let's drop down to the 60 then and take a look over here. And we do know that if we look in the wicks on one time frame lower, we can look for double bottoms. And wouldn't you know it, right here, after quite a bearish run, we've got a double bottom. Importantly, we've got a break above, close above, and then we've got another 2618. And look at that, we've come down now and tapped the 61.8 fib, giving you another entry. But that isn't all. Let's drop down to the 15 minute. So very, very similar story, except I said to you before that whenever we see head and shoulders with a double head, these are more profitable because they give me an entry into the 2618 without waiting for a higher high, higher close. Now we already know that this is quite a bearish move, but look at this. We have a left shoulder, first touch, second touch, initial structure high, giving us another head and shoulders 2618, and waiting for the market now to move higher. Now just want to clarify a couple of things here. We'll just stretch this out a little bit. I have purposely left out this leg, and the reason for that is if I move this structure level up just to the bottom of that wick, look at what we've done. Touch, touch, touch. So what that means is this is actually a triple headed head and shoulders. So again, left shoulder, first touch, second touch, third touch, break above, close above, or an initial structure high. So It's a break above close above the V point of the triple test. Okay, we haven't broken above the left shoulder as yet, but a triple bottom is now more important to me than a double bottom, so this in itself again carries more weight. So this means I can actually get pretty tight stops here. I've got my stop an ATR below this low, 10 pips below that psychological number 15800. So let's work out where targets go then, and for this I really need to go to the daily time frame. So let me just clear up a little bit of this here just so that we can actually see price. Okay, so here we are then on the daily time frame. It is very conceivable then that this bigger head and shoulders based on the lower time frame head and shoulders, double bottoms, triple bottoms, 2618s, is that we can see a pop here back up to retest these highs at 6000 psychological number. So let's bring on the orders, and that's exactly what I'm looking at here. I'm actually front running by 15 pips, and if I move this over slightly, you'll actually see that my targets are before the closes of these two big candles as well, so giving me some breathing room there to get first targets. Now if we then can violate this structure level here and officially giving us a head and shoulders on the daily time frame, then guess what, we can see easily, well, not easily, but we can see a retest of these highs. But I want to be a bit more conservative than that because this is a very big pattern. I'm going to be looking for, on the daily time frame, an AB equals CD pattern, which has a higher probability of hitting than just playing for a retest of the highs. So instead of playing for a retest of the highs up here, you can see that this comes in 20 pips before the 16200 psychological number. And if I bring over my orders, hang on, what have I done wrong here? AB equals CD pattern. Right, sorry, I was playing for a little bit of an extension, and I think we need to go to the 240 to see it. I do believe we can get a bit higher there. I was playing to here, wasn't I? Okay. You know what? I'm going to change this. Yeah, I am. I'm going to change secondary targets to there. There we go. I'm actually going to play just for this little structure level just here. So that does get me before that AB equals CD pattern and just within that structure level. And I was actually looking for a bit of an extension because we've got quite a nice structure area up here. But no, I want to be more conservative than that. So let's go back to the 15 and just clarify again what this is worth. And I will be... I want to get the risk reduced down on this trade, particularly as we come up to this structure level just here. So if I can do just before that psychological number 15900, I'll be reducing the risk on this, or at least moving to break even. Isn't the highest probability trade this because we have just violated the structure level here, but there is a lot of confluence here. So anyway, this is the risk, and I almost missed this trade actually. Well, it certainly wasn't on my radar this morning, not until we had that triple test on the 15 minute, and it's only then that I was able to see the bigger picture of where the move could potentially go to. So I mean, just look at this for a risk reward. I'm quite happy here to risk the amount of pips that are being risked, knowing that we do have a high probability of seeing a pop here to the upside and at least then reducing down the risk on it. So Okay, so to clarify, we're looking at 34 for stops, we're looking at 161 to target ones, and we're looking at 311 now to target twos. We're back, it's 4:15, so we had the hourly candle 15 minutes ago, and as you can see we're 27 pips up. I just want to show you this. If we're monitoring structure, and down here is where we had our triple bottom, we already know that this was an initial structure high like this. We saw a pullback for the 2618, and now we've seen a new structure high, officially putting us in trend. So what I am going to do is just reduce down the risk, as I said I would. Yeah, we are in trend, but because my stops are quite tight anyway, 15 pips below the low would get me right here, would get me 15800 flat. That's where my stop should go, an ATR behind the outside return. I'm not going to do that. I'm going to leave it until we get up to this higher level, as mentioned previously, so and around this 15900 psychological number, only because I don't want one of those weird spikes to come down and stop me out, because this is such a big trade. We do have a lot of room here to go, so I think unless we see a nice rally here and another pullback and then another new high, and then I'll move my stop to here. Just gives me that little bit more breathing room. We're back, currently 81 pips up now. We have reached that structure level that I spoke about, this little double top here. We've also reached the psychological number 15900. We are now officially 50% of the way towards the target. So I'm going to go ahead here, and I did say that I will be moving to break even, just because this is a higher risk trade, and we do have to now violate the structure level. So not a great deal going on here, to be honest with you. If we can get a close like this on the hourly, I'll be very happy. We've got a nice wick down here which should offer us some protection. Nothing else to talk about. Let's just leave it now and see if we can get that continuation higher. We're back, and I'm out of this trade for break even. What a real damn shame this was. Yeah, we had the correct entries. We had the triple test, the break above, the 2618 pullback, the stops in the right place, the entry. I did say that if we get up to the structure level here at the 15900 psychological number, I will move to break even, because I entered this based on it being the breakout, and we've just failed to do that. And it's a bit sickening when you were 80 pips up but you just wasn't able to capitalize on it. Here on the 240 you can see that we put in a very big bearish 240 candle. We're down now within the wicks of this shoulder. You know, we could see that area hold and see it continue. Right now though, there's no trading opportunity here for me, so I'm afraid I'm out of that for break even.